Richard wrote about this back in 2014, the idea of a speculative attack. And Bitcoin was tiny back then. And he kind of pointed that as it gets bigger, it's inevitable that we'll see some pools of capital find ways wherever they can to short fiat currency and be long Bitcoin. I think the thing about treasury companies is they can do it with better types of leverage than most other pools of capital have access to.
Bitcoin has the potential to help that business prosper across several cycles. Bitcoin is currently selling at about $120,000. Not far from its peak of roughly $123,000, the cryptocurrency has seen consistent momentum since breaking significant resistance levels earlier this month, with technical signs pointing to the possibility of higher pricing. Bitcoin is remaining within a rising channel that started in April on certain charts, indicating that the upward trend may extend toward levels of about $125,000. Recent slight declines, however, suggest cautious profit-taking throughout this upward trend. Despite volatility, trading volume is still high, indicating ongoing market interest. Policy changes that let retirement funds to engage in non-traditional assets, such as cryptocurrencies, may also have contributed to the recent boom by opening up new capital pools for the market. Numerous analysts are hopeful that Bitcoin will rise much further by the end of the year. Some have set $130,000 or higher as their aim. As Bitcoin's liquidity increases, several market participants are coming up with creative strategies to increase their visibility. Treasury businesses have an advantage in holding and expanding their Bitcoin holdings due to their more effective use of leverage than many others. This is an intriguing strategy. Some investors find value in these businesses because they combine Bitcoin exposure with cash flow and strategic management, which helps them withstand market fluctuations, even though many investors own Bitcoin directly. In a recent interview, Lyn Alden emphasized that by prudently managing their Bitcoin holdings in addition to their operations, these treasury companies can prosper over several cycles. According to her, this approach provides a substitute for investors who wish to have exposure to Bitcoin, while simultaneously obtaining the advantages of a company structure, access to capital markets, and occasionally leverage that individual. Holders would not have to see snippets of the interview to learn more about Lyn Alden's discussion. For additional videos, please like this one, follow the channel, and enable post alerts. I must discuss something that I've noticed more and more professional traders are using at the moment, and it's altering how consumers go about the marketplaces. This year, Cortex Trade, a completely automated cryptocurrency trading platform driven by AI, has been gaining a lot of traction. Here's why. The cryptocurrency markets are advancing more quickly than before. In a matter of seconds, prices fluctuate, emotion changes, and news breaks. The opportunity is lost by the time the majority of people respond. That is not an issue with Cortex. It immediately executes deals across key exchanges like Binance, Bybit, and Kcoin, and continuously scans price action, blockchain data, volume, and even social sentiment. This isn't just any old bot that uses a simple indication. A wide range of machine learning models, including LSTMs, CNNs, TCNs, XGBoosts, KNNs, and even hidden Markov models, form its foundation. Simply said, it's similar to having a group of skilled quant traders who work non-stop, continuously learning and adjusting to shifting market conditions. Additionally, the outcomes speak for themselves. It is already being used by an increasing number of traders I spoke with who describe reliable performance, quick withdrawals, and no bothersome lockups. Profits or your entire deposit can be taken out at any moment and sent directly to your wallet in a variety of currencies. That degree of control is something I really adore. Are you still undecided? Try using the demo mode. There is no risk and no deposit needed. It's the simplest way to observe Cortex's real-time operations and the reason why so many investors are incorporating it into their plans this year. The links are pinned in the comments and are located below. See for yourself why AI trading is rapidly emerging as a necessity for serious cryptocurrency investors by visiting Cortex Trade and becoming a member of the community. Thank you for viewing.
since they started their Bitcoin accumulation treasury strategy in August 2020. I've also been long since then. It's been a small part of my analysis compared to everything else I do. So I focus a lot more on Bitcoin broadly than I do on strategy, MicroStrategy, as well as broader equities and macro, as many people know. Um, and I've, over time, the thesis has changed a little bit. I mean, we kind of see the evolution of it over time. So first, I was like, okay, it makes sense. There's finally a stock that will own some Bitcoin. So in certain types of portfolios, you can access that. Then they began levering it, which I found interesting. As they kind of did, I think they're either second or their third tranche of leverage. I was like, maybe it's getting a little bit too levered. I'm a pretty conservative investor. But then they started issuing equity because they had a pretty high MNAV at the time. And I was like, okay, this is actually de-risking it to some extent. They're adding more on their equity side. And I increasingly saw that they're navigating this well. I think the executive team has been strong. So my thesis throughout the 2022 bear market was that they would get through it. They did. And since then, we've kind of seen them shift more from convertibles toward preferred. I continue to be long. For people that follow my research service, I tend to trim the exposure when it hits kind of euphoric levels, like particularly high MNAVs, and everyone on Twitter X is talking about it. But I've still stayed with a position to let the house money ride. And I think broadly, treasury companies make some degree of sense because if you have an appreciating asset, and Pierre Richard wrote about this back in 2014, the idea of a speculative attack, and Bitcoin was tiny back then, and he kind of pointed that as it gets bigger, it's inevitable that we'll see some pools of capital find ways wherever they can to short fiat currency and be long Bitcoin. I think the thing about treasury companies is they can do it with better types of leverage than most other pools of capital have access to.
Leverage adds risk, and not all treasury firms will survive, but some make sense since they manage an asset that is increasing in value. In contrast to ETFs, the top ones with capable teams raise money through debt and equity to raise Bitcoin per share. This starts a loop. They can buy more Bitcoin if their valuation is higher, but this might swiftly change if market sentiment declines. These companies' valuations require new, intricate analysis that is frequently linked to the anticipated increase of Bitcoin per share, which varies according on the size of the company and the tax situation. In general, valuation premiums tend to compress as businesses expand, although businesses with actual cash flows are increasingly interested in include Bitcoin on their balance sheets. Unsuccessful businesses using Bitcoin tactics are frequently viewed as dangerous. All things considered, Bitcoin is thought to be a great cash investment for anyone who believes in its long-term growth. Let's revisit the interview and view other snippets to learn more from Lyn Alden.
Which is interesting and gives them an edge. And I think that by the end of this cycle, we probably will see some treasury companies fail. I think there will be low-quality ones that get over their skis. So anytime you link leverage with something, you're increasing the risk. I do think the highest quality ones are valid. And this particular discussion happened. So I went on Strategy's earnings call as one of their analysts. And I actually asked the bearish question of the group, which is basically asking about stress testing during the next bear market. Like what kind of bear market are they kind of modeling or thinking about as they design their capital structure? And they provided their answers. And then also I generally agreed that their new preferred, which they're pretty excited about, is I think it's hitting a sweet spot that the market wants. So I expect it to be successful. And in one of my two threads, Andy and I went back a little bit and forth a little bit because I'm generally in the cautiously optimistic camp around these treasury strategies. Depends on the specific company in question and the quality of the management team and everything else. Whereas he understandably has a more critical view, which I think is healthy. I'm certainly critical in some aspects of some of these businesses. And that was kind of the genesis, I think, of this conversation. Well, I would say that unlike an ETF, MicroStrategy and other treasury companies that are operated well tend to increase their Bitcoin per share through these strategies, through this kind of debt and equity issuance strategy. And so you're paying a premium over the Bitcoin they have, but then you're also expecting this per share Bitcoin to increase. Now, there's different ratios that analysts have come to use, basically trying to figure out how much of an MNAV to apply based on forward, how much they expect Bitcoin increase per share. I've actually raised the concern that the problem with that is it's recursive because the higher their MNAV is, the faster they can increase their Bitcoin per share. And so that flywheel is really good on the way up, but can also just unravel very quickly when sentiment changes. It's different than, say, evaluating a company based on cash flows from operating a pipeline business or something. Um, and so while there's merit in that analysis, it's a new form of analysis and it's inherently just challenging. Um, my general view has been that I don't know what the right MNAV is. It certainly depends on the company. For example, Metaplanet is smaller, is in a jurisdiction where there's a really big tax arbitrage, which is different than the United States. So that they're actually tax advantaged there. And they started from a smaller base, so they've had very high MNAV and have grown very quickly. It's come down more recently, so I think that MNAV is somewhat context dependent, partially based on how much you expect them to be able to kind of arbitrage this. Generally speaking, as they get bigger, we should expect the MNAV to gradually compress because trees don't grow to the sky. Now they can continue growing. It's just that after a while, that MNAV generally starts to compress. That's so far what we've seen in the market. But I do think that an MNAV above one makes sense when you can attach this longer duration debt to Bitcoin, and therefore get through periods of cyclicality, at least if managed well and conservatively, compared to the way that hedge funds lever, the way that retail investors might lever. And so I think it's worthy of a premium. I would like to see eventually more cash flow generating businesses have Bitcoin on their balance sheet. The kind of history of this space, so MicroStrategy did the approach. They actually then ran a number of conferences called Bitcoin for Corporations, trying to get other corporations to do it. We saw Tesla dabble in it. Block got in to some extent. We didn't really see a lot of other companies with existing operations decide to add Bitcoin. Instead, in this cycle, we've seen a number of companies that kind of spun up to do the strategy, as well as increasingly around the margin, some existing companies do it. So I think there is a bigger market for companies that just use Bitcoin as a treasury asset while also having separate cash flows. But then clearly there has been demand for 5 years now, and I think ongoing, for a levered kind of pure play Bitcoin entity. And then I think the main questions to ask are how do you value that? I generally err toward conservative. And two, how do you manage the risk so you don't have a very large blow up, especially among the larger ones in the market? There are somewhat different types of zombie companies. In some ways, the perfect candidate to do this is one that's like a value stock that's cash flow positive, but doesn't really have any growth prospects to add Bitcoin. That's really interesting. And we haven't really seen a lot of that. Uh, Truly zombie companies that have like no cash flows, that's a much harder sell. Generally speaking, so far we've seen that the market certainly does not like uh, unprofitable companies, companies that are losing money to adopt a strategy because they view that as a distraction and a risk versus their kind of Bitcoin approach. So I certainly think it makes sense for companies to at least have your profitability like neutral, and I think there is a market for ones with cash flows. They don't have to necessarily have growing cash flows. And really, at that point, Bitcoin competes with other uses of capital like buying back shares, paying dividends, paying down debt. They can employ that as one of their potential strategies for what to do with their excess earnings over what they require for reinvestment. Sure. I mean, there's a number of points there. One of the earliest ones was why Bitcoin? Why buy Bitcoin with cash? Historically, the answer is because it's the best performing thing you could buy with your cash, pretty much. And then the thesis going forward is that it's going to
100%.
continue to be either the best or one of the best things you can do with your cash, especially that it's not a security. So with U.S. stocks, there's kind of a limit on how much securities you can have in your asset mix. It doesn't apply to Bitcoin, which is a digital commodity. And so the combination of high expected returns based on those who, generally speaking, those at strategy and those who invest in strategy are bullish on Bitcoin. So I certainly wouldn't recommend a Bitcoin treasury strategy holding for those who just aren't particularly high conviction long-term bulls on the
Do you
asset.
think there's a valid reason to have high expected returns on Bitcoin, um, based on historical returns?
Not just on historical returns. I I mean, I employ a number of analysis methods to determine what I expect Bitcoin to do. I still think that the total addressable market of what Bitcoin can address is much larger than the current size. From in my expectation over the next 5, 10 years, I do expect Bitcoin to still have high returns. Now, not the returns that when you go from $1 billion asset to $1 trillion asset, but I certainly think it can 5x and 10x from here, and we'll see how the numbers shake out in the years ahead. And it's also the risk situation is different than before. So when Bitcoin was tiny, it didn't even have the liquidity for like a corporation to buy it. It didn't have the regulatory clarity in many cases either. And so now that the tax treatment of it has improved, regulatory clarity has improved, and it's a big and liquid enough asset, the expected forward returns are not as explosively high by most analysis methods than they used to be. But the probability of
Right.
beating your main thing is that Bitcoin's the first asset that can actually compete with equities long term in returns. And so prior to this, when corporations had excess capital, they generally decapitalized themselves. They would give it back to shareholders. They would pay it in dividends. They would pay it in buybacks. They would sometimes make acquisitions for the sake of acquisitions because they don't know what else to do with the money. That's often a criticism that especially some tech companies tend to do. And one of the downsides is that makes the company more vulnerable in the future if they don't have something good to save with. Kind of like how households want to save for unplanned things in the future. Generally speaking, corporations want to save for unplanned things in the future. And there's just not been a great vehicle for that. Even gold, because gold over the long arc of time underperforms high quality equities. It's hard to justify holding a lot of it on your balance sheet longer term if you're a company that's trying to be in the top third of the S&P 500 returns or something like that. Well, I think in many cases you shouldn't. And when companies adopt the strategy, many of them don't get very high MNAVs because the market says, well, who are you? Right? So they look at strategy and they say, well, these people have been doing it for years now. They look at, say, Metaplanet, and they know the people running that. I mean, I know the people running that, and they think that, okay, I'll trust those people to manage this well. So it's certainly a company by company basis. And some of these companies have hired Bitcoin analysts, Bitcoin experts in various capacities to help them do the strategy, and then the market assesses, do they think they have the right people on board to help that company with the strategy? But basically the answer is, one, in the near term, there's an arbitrage. The market likes it. But two, longer term, as Bitcoin kind of grows and becomes less volatile, but still has the absolute scarcity aspect to it, which is desirable, it's one of the few assets that I think there's a reasonable case it can be made that it is able to keep up with equities over a pretty long span of time, if not outperform equities. And therefore, if a company doesn't want to fully decapitalize itself, it doesn't want to say, okay, we're going to take all of our excess capital above what we need for working capital and give it back to shareholders. We want to plan, for a pandemic lockdown or a big new competitor comes to our market. We need to make major capex to change or pivot our business. They want to have something that they can hold for 5, 10 years as part of their asset mix. And I think Bitcoin brings that in a way.
According to Lyn Alden, strong projected returns on Bitcoin aren't only determined by its historical performance. She employs a number of analytical techniques and thinks that the entire addressable market for Bitcoin is still considerably larger than it is at the moment. She anticipates that Bitcoin will continue to generate substantial returns over the next 5 to 10 years, perhaps growing 5 to 10 times, but not as dramatically as it did in its early years when it jumped from $1 billion to $1 trillion asset. She pointed out that since Bitcoin acquired regulatory clarity, more liquidity, and improved tax status, the risk profile has evolved. Future returns are therefore still appealing but less explosive. Additionally, she maintained that Bitcoin is the first asset that can rival stocks in terms of long-term returns. Companies that have surplus funds typically distribute it to shareholders in the form of dividends or buybacks, which could leave them exposed during difficult times. Since gold and other assets typically underperform stocks, she noted that companies desire to store for unforeseen circumstances but haven't had a viable long-term option until Bitcoin. She also mentioned that many businesses using Bitcoin tactics don't gain much market credibility until they have seasoned professionals in charge of it. Investor trust is often higher for companies like Metaplanet that have the correct teams. According to Lyn Alden, businesses can keep Bitcoin in reserve for 5 to 10 years in order to be ready for growth or emergencies, something that traditional assets don't provide in the same manner. about the potential superiority of treasury firms over direct Bitcoin purchases. According to her, they benefit from having access to capital markets and being able to employ prudent leverage. Some investors engage in these businesses in order to obtain exposure because they are unable to hold Bitcoin or Bitcoin ETFs directly. Holding Bitcoin can be a calculated decision for businesses looking to save money for purposes other than simply returning profits to shareholders. Additionally, this strategy can aid in the long-term growth and retention of executives. What are your thoughts? Is direct ownership still the greatest option, or will Bitcoin treasury businesses continue to beat conventional stocks? Kindly share your opinions in the space provided below. Please use the like button and share this video. Thank you for viewing. Remember to subscribe.